This episode of Untold Stories is sponsored by Bit Casino. You'll hear more about them later on in this episode. What is up, everyone? Good morning, good evening, good afternoon. I am Charlie Shrem, and we are listening and watching Untold Stories, where twice a week, together, we get to dive deep with some of crypto's most influential leaders, serial entrepreneurs, OGs, folks who can't get enough, who get their exit and keep coming back for more because the crypto rabbit hole is just so much fun. And actually, before we start the show today, I wanted to take a second and thank all of my guests, my listeners, the team at Blockworks and at Untold Stories, because today is episode 200. We've done 200 episodes, 2 years, over 2 years. That's a big deal. I don't think I've ever done anything this consistent for this long. And you guys, my listeners, are the ones that give me purpose every single day. Really, you don't even know how much purpose you give me. So really, thank you to those loyal listeners and subscribers who are here twice a week with me on this crazy journey. Konstantin Richter, you are a true OG. Thank you for coming on Untold Stories today. Blockdaemon, one of the most important infrastructure companies in our industry. I want to know, I have so many crazy questions for you, but first, really, thank you so much for coming on Untold Stories today.
Yeah, sure. Excited that it's 200. I hope as a middle-aged German, I can provide enough excitement to make it memorable for you.
No, it is because we're gonna have some crazy conversations today and talk about really understanding how the underbelly of our infrastructure and how when things happen, why they are actually happening. And I just want to take a second and explain to everyone that Blockdaemon is a provider of node management across, like, how many blockchains are you guys working can support right now?
Out of the box, we do 40 protocols.
40 different protocols you guys support. And why this is important is because all of your financial service companies that we use, all of the centralized exchanges, a lot of the decentralized exchanges, wallets that we use, staking, from depositing, withdrawing, all of that back-end daemon. And for those who know computing, daemons are everything, Linux and Unix, all based. There's a daemon, actually literally in Greek means helper, in the background. Mm-hmm. And so Blockdaemon does exactly that. It's so important. Do you guys feel every single day at your company that you're running and operating these 40 different protocols, that immense kind of like moral pressure that you have across our whole industry?
Well, it's a good question. I don't think anyone ever asked it like that. So I think one of the fun things is that, very few people know, actually, I think, the scale and scope of what we do. We run over 5,000 full nodes. We run, hundreds and hundreds of validators across networks. And the way we always just think of ourselves is we're sort of the institutional grade backup systems to a lot of this stuff. And the reason why that matters is because if you want to actually really bridge the crypto use case into mass adoption for consumers, you need these systems. You need something guaranteeing that transactions can go through relatively seamlessly. I think the one thing I think a lot about is specifically on how do we not become a single point of failure for the ecosystem as well. And so we think that 20% of all transactions at one point touch a Blockdaemon node across all cryptocurrencies, I would say. And so we think a lot about the architecture and security that we need to create, so our actual platform isn't jeopardizing the flow of funds or damages any of these networks. But it's a complex discussion because from an architecture point of view, it gets tricky really quickly.
Yeah, we'll try to, like, the best way I kind of go about explaining, and then I get this question a lot, the difference between node operating and mining. And the reason it's so confusing is because if we go back to, like, pre any other coin other than Bitcoin, and we look at back of how the original Bitcoin software operated, it was all the same, right? You had the wallet, you download Bitcoin Daemon, which was the command line interface, or you can download, I think a little bit later, you could download Bitcoin QT, which was basically the UI for the daemon. And that was for essentially wallet functions, the early days, but it was also mining. As soon as you ran that software, you were validating transactions, you were operating a node, and you were actually solving the hashes to potentially one of you. My MacBook, I think in the early days may have solved a full block. I don't remember, but that was all doing the same in the early days. When did that kind of split?
I think so. I noticed that I think in sort of 2015, 2016, the complexity of hash rates and block sizes and transactions that needed to be validated started to become problematic. I think the reason why I started Blockdaemon was in 2017. I was working with some friends on some projects, and we were on the ERC20 craze and trying to submit transactions through the Ethereum network, and we couldn't keep a node connected seamlessly for longer than 30 minutes really at the time. Like a geth node kept on going out of sync constantly, and so
I wasn't able to keep it in sync with the size of the growth of the data, the blockchain when I was trying in the early days to sync Ethereum nodes. Till today, operating nodes on most of these protocols is near impossible.
Yeah, I mean, and that's true, and I think it's one of the and so we try to abstract that away completely. So we've built an architecture that allows an institution 99.9999% connectivity, and obviously we solve that via a really complex decentralized cluster. I come from the mobile cell network world in Germany, and so the way I think of architecture is very similar to actually the cell networks that were created. So the old radio towers, kind of sort of is how I think of node infrastructure often. And so when I thought about these communication networks, that's ultimately what really attracted me to decentralized networks on the node layer. And so it incrementally gets more complicated over time. And so I think it's a fallacy. There's one of the software fallacies in crypto that's misunderstood, is that certain things get more complex over time, like hash rates, and then other things have huge economies of scale. But it's actually a fairly unusual situation in software where things normally tend to get easier over time.
Most of these new protocols use the premise of like experimentation to kind of gloss over the fact that they launch with a lot of technical debt out of the box and the ability to like actually not really scale. I mean, I'm an Ethereum holder as much as anyone, but Ethereum kind of launched a similar way. Ethereum 1 launched with the ability to have Ethereum 2 and Ethereum 3 because again, Vitalik and no one really knew, and a lot of our mutual friends didn't even know if this thing would actually work. And so if you look at operating 40 different, validators and nodes across all of these networks, this is a question that actually touches kind of close to my heart. Did Bitcoin scale the right way in 2017? And let me preface this question a little bit more by the question came down to smart scaling versus fast scaling. Fast scaling would have been to raise the block size, and smart scaling is the way we're doing it now. And I was just at Bitcoin 2021 in Miami, and there was a 1,000 square, I don't know how big, huge football field size hall, exhibitor halls of companies building infrastructure on top of Bitcoin, second layers, and things like that. But now you're looking at so many of these blockchains that do scale on like top of just raising the block size. Bitcoin Cash, for example, some of the other Ethereum type projects, proof of stake. So going back to that question, did we scale the right way?
Well, I think the proof is in the adoption and the overall market cap. So I think the answer is yes. And I think of Bitcoin really as a base layer, and it's actually good if it's a little slower. Because a lot of these larger networks also, statistically, anything that scales super fast can fail super fast.
Oh, I like this.
And so I think with Bitcoin, because it's so foundational to anything we do in this industry, we can't have Bitcoin ever fail. It'll be such a step back. And so I'm actually very happy with what they do it. The other networks, and we've been really deeply involved in launching most of the larger ones in early stage test nets and part of the first sort of Genesis block sort of world. And I have to say that all these networks are, very immature. It's very difficult to launch a decentralized network. It's a little bit like the Big Bang Theory. You know what I mean? Like kind of it's near impossible to do it in a decentralized manner efficiently. And so you start from a central starting point, and then you have to move across that spectrum of decentralization over time. But it's a really it's not just the technology; it's also the evolution of consensus. And so,
or lack thereof too. Like
Exactly.
sometimes the governance that no one shows up and the protocols fail, or
That's
that
right.
nothing
And
gets through.
that's right. And so I think with Bitcoin, it's sort of kind of, I think of it as this heavy heartbeat, that's consistent and that sort of has its own evolutionary pace. And then we have the crazy chains, the Solanas, the things that are trying to
I
do.
love those chains though, all of
Yeah.
them. I love the slinging, and the wild west of learning and some, you do have to experiment a lot too to see what works in the future.
Yeah, I agree. And I mean, obviously, and we touched on this prior, like city governments, and I mean, ultimately, it's all governance, right? Like, so ultimately, it's all around how do we govern these type of networks, and so it's fascinating, right? Like, and so I've seen permissioned networks govern much more decentralized than non-permissioned ones. Like, there's no one way of doing it,
You've been involved in so many genesis. I'm pretty sure that's the plural of Genesis. Genesis. It's not genocide. This show has become like a
close. Yeah.
This show has become like a 1 word a day or 1 word an episode, because English isn't my first language, and I'm always like learning how to pronounce and understand new words on every show. So you've been involved in a lot of genesis.
Mm-hmm.
Did you rest on the 7th day? Good question, right?
That's a good question. Well, unfortunately, we can't, because the fun thing around crypto, it's obviously 24/7, and so we've spent a lot of time in figuring out how we can theoretically rest on the 7th day by building platform architecture and failovers and monitoring plugins, so systems are self-regulatory as much as possible. And obviously, that's architecturally complicated because automation can also kill a lot of things, and so. But yeah, we've spent a lot of time trying to automate a lot of this stuff, but it's been it's been harder than I thought it would have been. And we do still do a lot of stuff manually, because automation can also cause a lot of problems in networks. And so we're still very early here. So not a lot of sleep, but we find it super exciting.
I know it's probably one of the most exciting. I could imagine you guys, or you, probably one of the only people that can have a real reason to have like 50 monitors going at a given time. It's like, I actually need these monitors going because we're like monitoring all of these blockchains. And I'd love to kind of get into it. And like, I was thinking earlier, and I thought of this question over my morning coffee, but starting from the early days of exchanges, well, really, like, not just exchanges, but for the sake of this term, you have wallets or any place that was holding for like custodial or non-custodial, any type of cryptocurrency at any point in time ever in the last 11 or years or whatever. But from the early days of these type of companies that ran on trivial MySQL databases, to the times of Mt. Gox, to the centralized exchanges of today, like with staking, yield providers, and financial services, we only had Bitcoin and then some others. But it wasn't until Ethereum where there was a significant trading pair other than USD. Now there are thousands of coins and tokens across hundreds of protocols, and you guys work with like 40 of them. Starting with those like earlier companies, can you kind of walk me through how they traditionally managed assets? Going from like the top tier regulated. I could tell you how we did it in BitInstant, sort of fill in some gaps too, 2011 to 2013. And how are they doing it all now?
Yeah, I mean, well, it's a complex question, but I can tell you that obviously the complexity of infrastructure has vastly increased, mostly because back in the day, exactly, you had kind of 2 or 3 trading pairs. When I started with Blockdaemon, most exchanges had Bitcoin, Ethereum, maybe Litecoin, and so the actual technical infrastructure was manageable in-house by most of them, except for Ethereum, which was constantly. I was part of all things, a Skype messenger chat group of 100 CEOs of like custodian and exchange companies, kind of just talking about ETH and trying to, hey, what's the latest think state of ETH that we need to connect to? I mean, and that was like 2017, like when things had already hit enormous scale. And so the proficiency of these networks was very, very poor. I also want to say that for that reason, I don't keep 50 monitors because I would probably have a heart attack.
Yeah.
The reality is that a lot of these networks are still very flawed, and you gotta suspend belief sometimes a little bit in this early stage, which is why governance and decentralization is
that's an
important.
interesting point. Yeah.
And so over time, I'd say that I give you an example as a company that ultimately people outsource node infrastructure to. Let's say a few years ago, maybe there were 100 crypto institutions that were considering outsourcing, and 10%, maybe 10 of them would actually do it because it was so incrementally important to their core business, controlling the API, the commands, the access points and stuff, that the trade-off of efficiency that you gain with a company like us in terms of security and cost wasn't good enough. At this point, you need to support dozens and dozens of protocols if you want to be meaningful. And the quality of our automation and the amount of companies entering the space is, I think we now have a target market size of around 10,000 institutions, and 50% of them probably go to outsourcing straight away, right?
That's a good thing for our industry, right?
Yeah, I mean, I think it's fantastic. And I think it's important for network quality. Again, if you go back to cell networks, every time someone deploys a node, they're ultimately building a cell, right? So each node augments the network, even if it's controlled by us, even if it sits on Amazon or Google or Azure. They're all components of better networks over time. They shouldn't be the only components, but ultimately we want more nodes in networks over time. And the more institutions come in, the other great thing that they do is they all force us to build these heavy failover systems, which means if their node goes down, there's an immediate node that can be circled in that takes over, which is also good for the network. It's good for the network to have backup systems that are instant. And so, yeah. So I think
which protocols would you think are? Oh, sorry.
No, go ahead.
No, I was going to say, like, on that note, like, which protocols have been showing the most growth in terms of those networks?
Well, I think what's been interesting is to see how much, I think, obviously ETH 2.0 and the switch from POW to POS is intriguing, and there's been hundreds of thousands of nodes launched on it. I think and that transition is going to be fascinating. I think that's going to be theoretically for people like us who debate proof of work, proof of stake, the economical implications of how decentralization is managed, who gets to benefit from operating nodes. Ethereum is a huge sea change.
I hate to ask this question, but if you guys are such large node operators on behalf of these institutions, when Ethereum moves to proof of stake, how do you kind of justify your democratic ethos that you were just describing to me?
Well, I mean, ultimately, the important part is it's important. We try to never run more than 30% of nodes in a network. Obviously, in an Ethereum, that's highly unlikely, but we actually are part of associations for certain protocols where we contractually agree to a cap of nodes we operate. And so we try to avoid becoming that single point of failure. Now, it's tricky because the economies of scale are obviously massive, right? So unless foundations really plan how to work with node operators like us over time, there's always a risk that companies like us will run a disproportionate large amount of nodes on a network.
So you're telling me that the integrity of these protocols are so important that, like, this is the difference between what we're doing versus anything ever in the history of time ever. But the integrity of this protocol that brings us all together, none of us know who any of us are, but basically maintains a checks and balances of monopolies and having someone having too much power and control to a point where you're contractually limiting your own business in a way just to maintain the integrity of the protocol. I love that. That is so brilliant.
Yeah. And I mean, obviously it's a necessity because if these networks fail, we have no business. And so we try to be very responsible. And I think decentralization is obviously mostly misunderstood because obviously it's not a binary.
What's your view on that?
It's really a life cycle. Not everything needs to be decentralized in the same way. And so I think also when people say, oh, there's only one protocol, like that's nonsense. Like there's a lot of financial problems that require different consensus mechanisms and ultimately probably different types of networks to solve them. And so I think for us, as I said, like the integrity of the network is really important. And we have a fun project that we're going to make public, I think, in 2 months. We've actually, for the largest networks, started to count and investigate every node on the network. And so we've actually built these maps where you can see the dispersion of nodes and as much as possible which data centers do they sit in, how actually dispersed are nodes for network for network performance over time. And it's actually something that as an industry we don't do automatically. It's really difficult to track decentralization on the server layer, for example. And so we're trying to be a leader there, where we proactively, also identify weaknesses in networks, where we say, hey, we've done that with Ethereum. In 2018, sure. We told everyone, listen, there's way too much exposure on ETH nodes on Amazon East. But people don't know it if you don't actually proactively start counting it. And so we've launched for a long time all our ETH nodes on Google Cloud to counter that. Like when people didn't want a choice, we try to give you a choice that augments the network infrastructure.
So you want to throw these nodes on as many data centers and different, as many physical places around the world as possible on purpose.
Yeah, absolutely. And so it's interesting. And I would say
so much fun.
I think some of the most decentralized networks are actually networks that people fundamentally don't think are centralized. And I'm going to break a lance for projects like Diem, the Facebook project. I mean, sure. They've incurred a lot of problems, but they've very early on set up equal to an extent association members that create a lot of the conflict and complexity that Facebook has with that project. But it's actually not a bad way to start from scratch, to pick 30 entities and say
it's an important experiment.
Yeah, exactly. And so I think people dismiss certain projects very quickly. I think people are often very misinformed. I think one other thing that, for example, when we started, we did a lot on Ethereum and Stellar. I think Stellar was interesting. People don't know a lot about this stuff. Like Stellar was really early, very institutional grade. Mm-hmm. And so it was kind of curious, so we've evolved a lot with them in how we build our node architecture. And so, people have these different perceptions of protocols that on a technical level, we don't notice. We see networks being very efficient that a lot of people don't hold in high esteem.
Protocols built for certain things are going to be engineered for those things and are going to perform better, but they may not be for everything. Not every protocol is trying to be the next Bitcoin, but I think that's where maximalism comes in, is where they assume it so. But at the end of the day, there is a huge use case for 30 enterprise, or even governments to together control, and together alone, without, that's a permission system, use the blockchain feature where there's such that fault tolerance to do some future governance down the road. Who knows? I mean, it's fun to kind of war game that out. What would that look like if you have what would the infrastructure space look like if you had government and Fortune 500 companies running nodes and are part of this governance process?
Yeah, and I do want to touch on one thing you said, which I thought was really interesting, which is, what crypto governance allows us is to have different people solve different global problems. You know what I mean? So it's not the same set of governments trying to fix global warming, but you could have a protocol where the consensus owners are people with more knowledge or a more ubiquitously generous viewpoint on a subject. And so right now, as a society, every political issue goes through the same political system. Mm-hmm. And so, we can't isolate education from gun rights or something. You know what I mean? It always goes, it's either this party or that party, and that's it.
I know exactly what you mean. And things are held up against each other. Oh, you want to get this through, but we're not going to get this through until you bring this through. And then governments get locked up and you don't have any proper legislation for 10 or 20 years ever, in most of these places.
And so in crypto, what's fun is you can have actual economic currencies solving particular problems, and there's different stakeholders that constitute the governance of each of those protocols that is much more relevant to the particular nature of the problem. And so that's what kind of I find really fascinating. I think with the Fortune 500s, ultimately what we do is we onboard the current capitalistic structure into these crypto networks, and we try to do it in a way that augments decentralization, but also onboards institutional grade adoption and allows for a mass market to be created. So I think the big philosophical bet we're making that is often maybe a little antagonistic to the crypto ethos is we believe that we believe you need to bridge legacy infrastructure into revolutionary new infrastructure. And that's really at the core of what we're doing. And so we combine regulatory infrastructure to DeFi, let's say. And so, and then there's people who are like, listen, fuck all this old stuff.
Sorry, no, it's true.
Like let's build everything from scratch. But then I always point out, like my grandma, there's a lot of people depending on Social Security. There's a lot of people depending on basic banking infrastructure in certain countries.
And now with our infrastructure, Social Security can be directly deposited into like the a Voyager app or a Fold app or something, and then can instantly, because of these regulatory DeFi kind of toll booth, rail exchanges, if you will, that do both sides. So connecting the banking system, ACH and routing numbers with a Bitcoin address.
That's right. That's exactly right. And so that's exactly at the core what we believe creates the larger benefit for more people quicker.
Wow, with a pretty crazy, chaotic year behind us, the guys at Bit Casino, my friends, are offering us 200 free spins for the Legacy of the Dead game. These guys are awesome. Over the past year, we've done promotions together from Valentine's Day all the way to St. Patrick's Day, and from celebrating all the different holidays in between, we've been doing crazy promotions, giving away Teslas, like 3 of them, and all you have to do is go to untoldstories.link/BitCasino, hit the rewards section, and claim your 200 free spins on the Legacy of the Dead game. These guys have been helping out Untold Stories for over a year now. Fun, fast, and fair gameplay. Bitcoin, Ethereum, Tron, and Litecoin. I mean, you got everything. Go have some fun. untoldstories.link/BitCasino.
And I think it'll be fascinating. I mean, I'm so excited. I mean, I'm excited and terrified in a way because, there's an old saying by the German chancellor called Otto Bismarck. And he always said that there's 2 things people should never find out: how laws are made and what goes into a sausage. And it's kind of true. You know what I mean? Like when, I mean, obviously how laws are constructed and governance evolves is inherently human, which is chaotic and flawed. And, the only way I think we can bring out the best in each other outside of autocratic systems is if, we have the largest contribution possible. And because I do think, like they say, the truth is exposed over time. I think the more people get engaged in the process, ultimately the moral outcome is higher. And so Bitcoin is a good example of that, where technically we could make improvements, but it would limit contribution. And so if you want moral and true systems, you need wide decentralization. And so, and so it's interesting. I mean, I find it so fascinating. I'm so grateful how this is all evolving.
I agree. And I think I look at it in a similar way. If you apply like simple Buddhism to like decentralization, the path to decentralization, you'll never actually reach, they won't tell you this, but you'll never actually reach enlightenment. Maybe. Right. Very few people. I'm on that path. I'm trying to. And I recognize the Buddha in everyone, by the way. But same thing, decentralization, as long as you are conscious and have humility and are mindful of needing to always stay on that path of decentralization, you can at times, like you were saying, suspend your democratic ethos for the sake of adoption and growing some network and building out infrastructure. But as long as and there's that like constant path and growth to decentralization, nothing's perfect, right? Nothing's perfect. And here we are today.
And it's beautiful. And networks, it's the same, anyway, we could like totally go off, but it's like when you look at Earth, it's actually the perfect ball. And so what I mean, it's the perfect round shape in the world. And because we can look at it from far away, we can see it as such. But when you get closer, you see all the little weirdness and the mountains and all that stuff. And so I think what I'm trying to say is that with the right perspective, you can create perfect shapes. but it requires distance and it requires a lot of things to come together. And so I love networks that contain a lot of participants. And my
quirkiness too.
Yeah.
Well, let's talk about like Dogecoin, for example. What would be a problem? How would you upgrade Dogecoin right now if there was like some amazing new technology that was, I don't know, whatever, benefits how would you upgrade Dogecoin? Who would even start? What would be the process?
I don't know. I mean, I know the guys who did it very early on.
Me too, but they're out. They were our friends, and they're gone.
And
no involvement in this whatsoever. So they're out.
Yeah, probably good for them, by the way. I wouldn't like. I mean, it's a weird situation with Dogecoin. I think, obviously, I think clarifying the economical structure is going to be vital. I think right now people are banking on the goodwill of people that they might not know.
Yeah.
In how the network evolves, also its monetary policies, and so I think as a functional financial network. In the interim, there's a lot of work that needs to be done on every level of the protocol. And so I think, I mean, I like it, but it's definitely, I mean, I don't know. I feel like it needs an open source committed community. It needs a foundation that sets up grant programs to actually physically fix bugs, etc.
Yeah, that's true.
And
by the way, if you guys
much more on that level of like, how do you organize this so you can dedicate funds to actual improvements over time,
like a DAO type
we
of
run
thing.
those nodes for our large customers, and I mean, it's weird to me, man. I mean, like in the last 6 months we had like huge Fortune 500s like, hey, can you spin up a Doge node for us? And we're like, yeah, sure. I mean, but it's a weird network.
Do you think Bitcoin would ever get an upgrade through, like, I don't know how you would do it, through like a reverse soft fork that would increase more, exponential more privacy? Or is Bitcoin too mainstream now where like everyone involved wouldn't want to go that route?
I think it's too late. I think privacy is a good one. I mean, Bitcoin is sort of pseudo anonymous, right? So that's good enough for certain use cases. I think you probably, there are use cases where you want more privacy. It's probably good to separate that out from Bitcoin, because from a regulatory perspective,
I agree, yeah.
I can tell you that the legal and financial infrastructure doesn't like privacy coins. And so it would make the process of onboarding people onto Bitcoin a lot harder if there were a lot more, prominent privacy features on the actual chain. And so I feel like we've got some really good privacy tokens, and I think they're at the forefront of trying to figure out how to function. We have banks and customers who, for regulatory reasons, ask us sometimes, like, can you please not run any nodes on Zcash, for example, which we do support. And we're like, listen, I mean, we're an infrastructure provider, we just run infrastructure. We avoid the subject, but
yeah,
I could see how regulators will use privacy tokens as a means to crack down on crypto distribution.
That's just one of, you have the FUD dice, as Nick Carter has, and you throw the FUD dice and you have whatever FUD you want to have. What are like, so now I guess where I was going at with that privacy question is that what type of development is going on with most of across all of these blockchains to upgrade all of their infrastructure? Is there like a common thread of, is it scaling? Is it doing things without as much technical debt or latency? What is everyone trying to work on? What obstacles does our crypto industry need to get over from a technical perspective to get us to that next level where we can like actually participate in crediting capital markets in the trillions of dollars?
Yeah. And I think the reality is that actually, in order to really get deeper into real credit and capital markets, it's actually very simple things. Most of the projects already solve way too complex problems for a very small group of people. And so, like, the reality is
so funny. Sorry, sorry. Okay. Yeah.
No, I mean, it's like, if you look at where the mainstream is today, at best, they allow people to hold Bitcoin and Ethereum. And so I think the interconnectivity between these protocols needs to be clearly managed, because regulators will crack down on a lot of different bits and pieces. And so I think the most important part is, one is, how can they, if you think about what regulators will allow, is they want to make sure that they can track flow of funds to distinct individuals, which is somehow counterproductive to what we want with crypto. And so Bitcoin is the sort of medium way there. I think most of the other networks, are way too complex. Like, we're still on a very basic level of also building the liability and insurance framework, even for those networks. And so a lot of it is actually liabilities, insurances, all those type of things matter to people way more than crazy functionality of like X million transactions per second and things like that. The network performance is always manageable by decreasing decentralization, for example. And so I think it's the regulatory frameworks are the ones that need the most work.
What's going to happen with Ethereum, with Ethereum 2.0? I mean, what's going to happen with that 1.0 chain? This is something that I've not been able to really get a good understanding of myself. How will the Ethereum chain just not continue to keep going? How will Ethereum 2 kind of like take the ticker symbol of ETH? You won't have like a block size type of situation, block size war type of situation.
That's a great question, man. I don't know. I haven't really thought about it. Probably you will. I mean, it's like ETH Classic or something, right? Like
I know, it's like,
yeah.
Everyone's looking towards this ETH 2.0 as this maximum bullish event, and I'm looking at it with fear.
I think it's a good point to look at it. I can see both sides. So from our perspective, it's obviously, as an infrastructure provider that sits on full nodes and validators, it's the biggest event possible for us, because it will mean, for example, I'm making a crazy statement, but Blockdaemon, when that switch occurs, will be the largest ETH miner in the world. And we haven't been in mining at all, so it kind of takes...
Because mining will be staking now, so you'll have this crazy new revenue stream too.
That's right. And so for us, like the, transitioning something as large and important as Ethereum will suddenly mean that we're a much more important stakeholder in the Ethereum community than we already are. And so for us, because there's going to be a lot more nodes. And if you have a lot more nodes for a company that knows how to manage a lot of nodes, that's a good thing. And so, we'll have millions of nodes, and we have an infrastructure that can manage tens of thousands of nodes across hundreds of different data centers. And so we're kind of primed to help lift a lot of the weight for ETH.
To help, yeah.
And so for us, it's a big commercial event, I think. And so we're very excited about it as Blockdaemon. As a sort of crypto enthusiast,
You must have the patience of a saint, because I'm getting anxiety just thinking about this.
Yeah. Well, I mean, who knows? I feel like I am a little older, so I definitely I feel I have patience, and I've seen it all before, right? So we've survived a lot of crazy things, but ETH 2.0, I think next year is a reality. I can see institutional partners asking and serious about it, because the big inflection point is that when ETH 2.0 is enabled, it means that everyone who has allows people to hold ETH will ultimately have to offer interest to them. And so it'll be the largest DeFi onboarding event in history of our little ecosystem to date. It means that companies, not just Coinbase, but potentially a PayPal, a Robinhood, will have to offer a yield to people.
I've been playing around with this because I've been an early investor and advisor in the Casper protocol. Right. And in Casper, it's basically ETH 3.0. And it's fun because you can do all that now, run the validators and it's funny being in the chat groups, because you have different validators. You have validator groups that are just competing with each other, constantly offering better rates and different things to get to for people to stake at their value. So I kind of do think there is a huge decentralization, huge aspect of decentralization in that. And that needs to be played out. Like this whole Ethereum 2.0, everyone being a validator type of situation, that needs to be played out, because that may, when you put a little bit of moral responsibility, just a little cherry on top of moral responsibility to a holder, things can be different.
Yeah, I agree, and that's why I think it's so interesting and important. And so but it's an interesting switch. It's kind of sort of, I mean, it's an extreme one that Ethereum is making. And so when people are so, oh, why is it always getting pushed? It's like, dude, I mean, you're kind of
it's it's like when countries enter the UN, it keeps pushing off because there's a way to do it.
Yeah, it's complex. I mean, we're ultimately moving from a delegated democracy to a, everyone has a vote type of world, and it impacts so many things. It's so complicated to do. And so I feel like I'm super excited about it. I think it'll be the biggest step as an industry we've taken to bringing DeFi to life, which is ultimately what we're all on about, right? Is like the ability for people to access credit markets and financing
individually,
on a global scale, in spite of governance and repressions. And so I think it's actually going to be the largest structural step that from a moving of capital and getting people onboarded on new rails that we've seen to date. And so I think people are underestimating the importance of it, actually. I think it'll be hugely interesting. I think it'll be interesting. I don't have an opinion on the price of ETH, because it could also mean that people start seriously cracking down on it.
It could be a
long-term dual thing.
It could be one of the best investments over a long term too, or one of the worst. It doesn't matter. I like to look at these things as more of like these like we talked about, like social experiments and understanding how people act and react. Because listen, if you look at it like Ethereum moving from 1.0 to 2.0, look at it as a country with millions of people saying we want to transition to a completely new style of governance. And traditionally that's failed almost every time except for a few cases. And here we can play it out now. We can war game that. We could, without the war.
That's right. I mean, it's so insane. It's the same like when people, like kind of like I have the same enthusiasm around Bitcoin, when we have huge problems with price and fluctuation and all that type of stuff, but nobody gets bailed out. We don't print more money. I mean, we've created a system with Bitcoin that is, unbelievable, actually, if you think about it. And, ETH is going to do the same via governance at this point in time. I think it's the most interesting social and financial experiment of our time to date, outside of the creation of Bitcoin. And so it'll be really, really fascinating to see how that plays out.
Wow. Thank you for such an amazing show today. Giving us this, just mind-blowing today. What a great, this is for episode 200. Thank you. This has been awesome. Konstantin Richter, founder and CEO of Blockdaemon. Check them out if you're starting a company in the space and you need some help with your infrastructure. By the way, I shouldn't tell you, but I have a great idea for a podcast name. If you guys want to start a podcast, you can call it Blocking My Demons.
Oh, I like it.
I know, right? Go get that domain name now, because literally, but you have to spell it DAEMON.
That's right.
It's like Blocking My Demons. Come on, that's a great name for a podcast. I hope good luck. Yeah, get that domain name, even if you're never gonna do it. It's a great name. All right, my friend, thank you so much. Yeah, because when the show releases, someone's gonna get it. I'll wait a week.
Okay, we'll take a look.
All right, cool, my friend. Thank you so much. Thank you for listening.
And thank you, man, for all the great work you've done in the ecosystem. You're a true legend, and congratulations on, becoming a podcaster and 200 shows. What a journey you've been on, man. So great to see you doing so well. Chasing enlightenment, man. It's exciting, inspiring.
Can't wait to hang out and see you soon. Thank you. I appreciate that.
All right, man. Take care. Bye.